Request Mr. Bimal Jain, Chairman Indirect Taxes Committee, PhD Chamber, to kindly analyze the indirect tax very briefly and quickly because we are running short of time.
Respected Dr. Haspukadia, our President Maheshji, Gopalji, past President Alokji, distinguished members, ladies and gentlemen, good morning. This year budget, no doubt, putting focus on rural development, infrastructure, agriculture, farmer welfare to boost economy, overall economy, development and growth, no doubt. And the good positive changes into indirect taxes, I'm not going to touch upon each one, but some of the things which are important for trade, industry and commerce. First of all, rate of interest, which is now rationalized. It is now 15% for service tax, excise and custom. It was as high as 30% in case of service tax, now rationalized, except when service tax collected but not deposited, then 24% rate of interest would be applicable. Subsequently, imprisonment provision, power to arrest provision. There was threshold amount of 50 lakh rupees, which is increased to 2 crore rupees, is a good one. Well, steps taken by the government of India. There was certain exemption which was withdrawn last year, entry 12, pertaining to service provided to government, local authority and governmental authority pertaining to all government construction, government school, government hospital. Those were bring in a service tax net, but this year they have understood the problem. If any contract executed prior to 1st March 2015, where contract does not have service tax clause, and all of a sudden this exemption was withdrawn last year, what will happen to those industry? Now, specific section 102 and 103 is being provided in Finance Bill 2016 to provide benefit, retrospective exemption benefit of service tax, and it will continue till 31st March 2020. At the same time, refund would also be granted in case service tax is being paid from 1st April 2015 to 29th February 2016. Going further, IT software, which is very much important for digital India. The dispute persists, chargeability of excise duty versus service tax. Simplification provided for the chargeability of taxes, excise duty and service tax on IT software. Input service credit allowed whenever transport of goods by rail or transport of passenger by rail. It was not there. Last year they brought no credit would be available, but this year now they are stating input service credit available to railways transporting goods and passenger, even container train operator. These are good changes from indirect tax perspective. Without taking much time, I'm highlighting some of the concern which is raised among the trade members, and these are very important. I would like to invite your attention, sir, and if we can have some clarity and clarification coming on those points. Krishi Kalyan cess, a new cess which is being proposed to be levied 0.5% on value of all taxable services from 1st June 2016. So the practical problem is that this Krishi Kalyan cess, TRU later says Sandbet credit would be available, but there is no corresponding change in Sandbet credit rules. So I'm not sure whether credit would be available or not, first part. Second, when we look at Make in India, sir, what happened? Education cess and secondary higher education cess, which was subsumed with the excise duty last year budget, but no relief measure is being provided. What happened for the balance of education cess and secondary higher education cess standing on 1st March 2015? This is the first part. In between, we got Swachh Bharat cess from 15th November 2015. It is neither sandbatable to a service provider nor to a manufacturer. Now coming to Krishi Kalyan cess, what manufacturer will do? His output is not chargeable to Krishi Kalyan cess. Effectively, that is going to add up in the cost of goods. Virtually, it is going contrary to Make in India. So when we want to promote Make in India, we have to see such cascading should not come. We are on the verge of GST. We want to done away with the multiplicity. Even Honorable Finance Minister wanted to done away with 13 cess collecting less than 50 crore rupees, but new cess are being added just on the cups of GST, which may come from 1st April 2017. Coming to second important point. So so-called notice for non-fraud cases. Period is increased from 18 months to 30 months in service tax, 1 year to 2 years in excise and custom. So it is highlighted, now we are in the automation, e-filing mode. Everyone filed their return electronically. Why normal period where no fraud, no suppression, no collision, this period is increased. Recently we have seen number of commissionerate is being configured and made, new position is being created, commissioner, principal commissioner, and this time period is being extended. So we have to invite, we are going forward ease of business. What message we want to give to the trade? We are equal partner for the nation development. So this period is increased is going contrary to the vision of ease of business. Coming to the third point, sir, time limit availment for standard credit on input and input services. We are increasing time period for issuance of so-called notice for normal period and restricting time limit for availment of standard credit on input and input services used by service provider or manufacturer. But what happened? Capital goods new provision is being made. If it is used for 2 years for exempted goods and exempted services, credit will not be available. So this is going contrary to the perspective of cascading. If capital goods is used after 2 years, credit should be available. And capital goods is not certain. Today it is exempted because my product is exempted. Tomorrow it may be taxable after 2 years. Why credit should be denied? And going contrary, that cascading is coming into the system. Coming to the dispute resolution scheme, 2016 launch in direct tax and indirect tax. It is on the premise of Honorable Finance Minister said 3 lakh cases are pending and 5.5 lakh crore locked up revenue. But from indirect tax perspective, what is the provision said? When my appeal is pending at Commissioner appeal, I can go for it. So I'm highlighting some of the point which is giving food for thought whether we would be successful in achieving the target. The first one, under income tax, you have said if demand is less than 10 lakh rupees, no penalty. Corresponding provision is not made. Corresponding provision is not made into indirect tax scheme. First part. Second part, when we look at commissioner appeal position, the most of the cases we have seen in the past data, 80% cases are getting, in favor of SSE and against revenue before tribunal. So if at all we want to see success of this particular scheme, we have to make it more simpler so that more guys can come in and avail the benefit. Otherwise, you go to 78, there is specific provision, 25% penalty if we pay tax along with interest within 30 days from the passing of order in original. Why somebody will go to commissioner appeal? If he's willing, he can pay at the same time under section 78 of Finance Act 1994. Moving to next item, section 67A and rule 5. Now, Krishi Kalyan cess would be applicable from 1st June 2016. So this question may come up to your mind that service provided prior to 1st June 2016. But Krishi Kalyan cess would be applicable if payment is received and invoice is raised after 1st June. As per Rule 5, it is applicable. But what is the mantra of taxable event? If service rendered prior to 1st June, when Krishi Kalyan cess not applicable, it should not be leviable. But 67A giving rider and then drawing deeming fiction that Rule 5 will have authority of law by 67A subsection 2 of Finance Act. Coming to the senior advocate, this is being raised now. Senior advocate would be under forward charge other than normal advocate. So this question is being raised. All other advocate or firm of advocate would be under reverse charge. Senior advocate would be under forward charge. So little contrary, and this particular issue, legal services provided by advocate, be it normal or senior, litigated and pending before apex court. Coming to the declared service, here I want your attention, sir. Any activity, any service provided by government or local authority to business entity is under reverse charge from 1st April 2016. Now this question is being raised in a trade. We are getting lot many services from government or local authority, and I am a business entity. Am I supposed to pay service tax under reverse charge? Of course we have to pay, and there will not be no SSI exemption. SSI exemption will be available only to a service provider. So like MCA, ROC, municipality, so many services we receive in normal days, normal business course. Are we supposed to pay service tax, or we won't have clarity? Those 66 each providing clarity, that any assignment of right to use of radio frequency spectrum is a declared service and not sale of intangible goods. But clarity is required before 1st April 2016. Coming to the monorail and metro, now exemption is withdrawn. We are all trying to promote infrastructure. If infrastructure coming with a cost, taxes are exemption are withdrawn, taxes are being levied, it is going to add up the cost, and which is in turn going to increase cost and services. Last one, sir. Last one, sir. Just last one, sir. So GST, we were thinking that we would have great announcement coming from Honorable Finance Minister. We have not heard much about GST, but we want to hear from you how we are heading for roadmap for GST. Time is paused. I could have gone, but thank you very much. Thank you very much, sir.